London Session Open. Today is April 26th.
There we go, better audio. So, good morning. So, welcome to today's edition of the London Session Open. Today is April 26th, 2019, and it's 7:24 a.m. in London when we're doing this market update. Let's take a look at the markets, and we'll begin with the preferred trading setups. There's quite a lot of them, a lot of different markets on my list actually, and hopefully it can turn into something constructive. It's not usually have so many. I know some of these are duplicates, but there's some decent amount of markets. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 13, yeah, 14. 14 markets. There's obviously more, but some of these are duplicates, like these ones here. I think even this one. So, and this one. So we'll see what happens. As for the dollar index, it's pretty much unchanged today. Looking across many other markets, I think we're gonna have a bit of a correction today. So it looks like should be able to go back. Hopefully not too deep back out of this big move. You got the breakup point, and you have first fib here. Out of this shorter term leg, I think we could maybe still go down, say 50% of this leg, which would in essence just put the dollar index back at breakup point. Now I think I need to adjust my stop loss. I had it down here somewhere and I pushed it up a little bit to just below this level, but I think I should just put it just at the 97.55. I think that makes more sense. So if we have a pullback, it's going to be less likely that it's going to be hit. Hopefully, I mean, you could easily just go back to 97.83. I think we just need to understand that. And then hopefully it's just a quick little test and then we're back up at the highs again. And I'm not sure exactly how I'm going to do it. Hopefully I can buy a bit. I'm not sure if that's a very good idea, but maybe I can buy some. So as for gold, by the way, as you know, I got stopped out yesterday. Send a message about that. We're back up now at the stop level. I think this is just going up a bit. I looked across gold in other markets, and it's doing quite good now. So when GBP traded lower, euro also traded lower, then gold actually managed to claim back losses. So it's just general demand for gold really that is lifting this. We'll see what happened with Russell. It's just trading sideways for now. If this just trades sideways, that's fine, and then we could work with our breakout. This is a dollar versus Hungarian forint, which had definitely a nice, relatively good follow through. You had the breakout, went up a bit. Now, just looking at this by itself, I do think, much like the dollar index, we can have a bit of a decline. Overall, I'm going to be bullish as long as trade above this level. And, if we adjust the fib now. So first percent, maybe 50 at the breakout. So maybe down here somewhere. The EMA should be, EMA's here somewhere. So it might be interesting to buy some. I just need to pay attention because most likely if this goes down, dollar index is going to be at break even. And if dollar index is at break even, then it's no point opening up more here because it's just like having two positions, which is into highly correlated pairs, which just means that it's just like having one big position. So instead of risking, say 1.5%, I will be risking 3%, and that's nothing really I want to do. But maybe if the market does something like this, so it goes down and then up and then down and then create some sort of pattern here, and then maybe when it's quite clear, maybe somewhere here, I guess, that we can, instead of having a stop loss down here, we can place it here. And at the same time, the dollar index will probably be doing the same. So I can tightly reduce the risk. Then I'm going to buy some more. I think it would be good to have maybe a 3% exposure. I mean, the risk reward ratios in general are like 4 or 5 on these ones. So say 4 or 3.8 by 3. So like 11% move, maybe something like that. That would be good. What else? I'm just looking for new opportunities now, not looking to sort of enter. Well, this is interesting. Actually, dollar Singapore dollar had a quite nice pullback overnight. This could have been something. You can see how went down and quickly bounced. Might even add some euros at one point. I did check literally all of the markets yesterday for new opportunities, and I know he's been, looking at this again. We'd look to trade this a few times. Then it's the dollar yen. Probably not gonna enter it, but at the end of the day, sometimes the market needs more than one attempt, and now you have 1, 2, 3 pretty much solid highs around this level, and the structure still looks like a head and shoulders to me, with the head, left, right shoulder, two right shoulders to some extent, and a clear break to the upside could do what I suspect it's gonna do. So I'm still open-minded here, and I think we can probably trade upwards. This is also a new one. I know it's declined quite a bit already, so I think like this by itself is sort of a indication we're bottoming out. Have that strong decline, smaller indecision day, and maybe now going upwards, maybe to 70, 60, 70, 80, and then we'll still be within this what looks like a major ascending triangle to some extent, and then we can potentially work with that breakout, but ideally not today, rather tomorrow or something like that. So Monday, that would be just because the longer we spend time here, the more comfortable will people be to have stop loss also just above. You might remember this one. We traded sideways and we traded lower, and I said just be bearish below this level, above this level. Oh, sorry, below this level. Stop loss goes here, and we did actually decline. It's just that it declined massively and then jumped very quickly to the upside. So hopefully it does something like this as well. And then we have dollar Swissy. It's actually in the dollar index. I'm not sure if we're going to add anything here. And this one is new. So we have 2 new things, so 3 new markets here in this list, which is another one, again, very highly correlated. It's dollar versus Polish zloty, or zloty, I think it's called. Nice ascending looking triangle. As a minimum, it's like a double, if not a triple top now, especially following this sort of negative or failure to break higher yesterday. And much like the Aussie dollar, I think it might need to go down a bit. And maybe Tuesday or Wednesday next week. If we take out the high, maybe stop goes below whatever the low is at the time, and then we could look into do something like this. So there's some more opportunities to trade on this whole dollar theme. It didn't really work out so good in gold. That head and shoulders did not really work out that well, but you still have, so we're going to look at it in a few minutes, patterns in the euro dollar, patterns in GBP USD, patterns in New Zealand dollar, and patterns in the dollar Swiss. So you have 4 big things, and you have what looks like a head and shoulders in the dollar yen, which has not been activated, and you'll have a pattern that looks like a descending triangle in the Aussie dollar that have not been activated. Finally, there's no strong pattern in dollar CAD, but we already know that dollar CAD is doing good. So in essence, you have 5 out of 7 different markets. 5 out of 7 different markets that are already bearish for the dollar. You're just waiting for those two other ones, and we don't need these two other ones. But at that point, everything is just going to be bearish. So let's take a look now at the other markets. So the general market overview. So Euro USD, I think is ready to correct higher. It's really 50-50. It might just trade below yesterday's high and then sort of continue to trade sideways, and then tomorrow we just trade lower, or sorry, on Monday we just trade lower. It could also just go up to the breakout point, and if it does go up to the breakout point, I wouldn't see that as a threat, because this high itself is just one day high. It's a bit fragile. It's not as much as gold. Gold, we had 1, 2, 3, 4, 5, 6 days at the same level, so that was more important. Not that this level that took out here is super crucial, because I think I'll just go up a bit and then we'll be still trading down here in the next few months. That's what I think. So I wouldn't get worried too much if we take out the high. I think if we test the underbelly of this market, of this pattern, I think traders will sell. And it's at the end, it's all about that residual ratio. We can do this 4.61 time, similar setups, and as long as you just get one of those right, we'll be in profit. So we do it the fifth time we get it right, and we get this full thing, and then we're back at break even. Same thing here with GBP USD. Now I think GBP USD should be capped because it had that bearish day, a very strong move to the upside, and to retest at that breakout point. And I think at that 129.80 level should be sufficient. We could easily be trading just at 29.83. In fact, it's just like 70 pip away, that trend funding level. Might be even too close. If you don't want to be too close, and just I've been too close lately, maybe you can work with 130.19. As long as you trade really below that level, there's no real change to the outlook. This level here is just small to sort of, there's most of the good trade ideas. When you have like a rectangle or something, the market trading sideways. When you have that break, usually it just goes down. Those are sort of the best trades. The trades where the market, imagine we break to the upside instead, sort of lingers around. It can work, but what happens is that just develops into a different pattern, and then does something like that. The problem here though is that we would spend maybe worst case a few weeks doing this, and we might still be heading down lower. A good example of that is platinum. As you might remember, we traded this one, and we had that breakout. We were in profit for a little few days, went up, then went all the way down to the breakout point, and then all the way up and all the way down. So there's a bit of time wasting here. This pattern triggered already on April 4th. So that's why you have those tight stop loss orders. GB dollar yen, again, probably look for a break to yesterday's high. I think that could be sufficient, and then you'll have the head and shoulders to work with. It's Aussie dollar, we already spoke about it, probably gonna go up a bit, but still within a range. So still something I don't want to trade on trade ranges if I don't have to. So 69.79, that's the break point. New Zealand dollar versus the USD, having that corrective move. This is just profit taking. As long as you trade below 66.84, I think people will try to sell, and I think people will try to sell STAR quite soon. Fib from that whole section. This is your first fib. My stop and trend funding level for this is at 66.84. So from this smaller perspective, well, this lower leg here, we are at the third fib. and we are at 66.46. We might go a little bit higher, but I think it's gonna start to roll over soon. Dollar CAD, we talked about this, and the idea was to buy here. Here you needed to be very, very patient. You know, we were here. I think it's gonna go down, as I've been saying over the last few days. Go down a little bit, maybe down to the lows of April 24th. But I think from these levels here, people are gonna be quite interested to buy it again. And we're gonna leave this here just to remind ourselves of what we could have bought. And I think really above this level here, which is the 33, 36 level, that's the new trend funding level. So you should lock in a little bit of profit here. Now, this is not a very strong trend, and the pattern is not even really that good, but it's possible to lock in some profit here and then buy a bit more here, unless you want to keep it. And I think we will be trading up here eventually. And then dollar Swiss, we already talked about this several times. Pull back to the buy area, and I think I said probably this level here should be enough, but really this level down here is probably the better one. So this would be the 10094 level, which also happens to be the April 18th low. Gold prices, I think they're going upwards, at least in the very short term. What's quite interesting is that from a head and shoulders perspective, sorry, wrong chart, the breakup point was here. So, and the neckline is here as well. So there's actually nothing wrong with short selling at this level. The only thing though, again, as I said before, this is a very hard retest. I am, however, tempted, maybe short a bit at 1284 or something, stop loss just above. Because again, as long as you trade below this high, it should be fine. It's much like platinum. Platinum, as I showed you here, this was the breakout candle at 870. That will be the low of that candle, and we went really, really hard, retested that, but we have not traded below that level. It's much as well like the dollar index. As long as we trade above the breakout candle here, we should be okay. As for gold prices, also crude, look at that. They finally, I didn't even notice this, they finally go down to the buy area. They touched the buy area yesterday. So if you've been looking to buy, this is the opportunity. In that buy area, no change here. This is very standard technical analysis. In an uptrend, residual ratio slightly better here than before, so I would be bullish. Then you have the S&P, which traded lower. Fortunately, did not reach that buy area. But I'm bullish about 2886.7. If it touched the buy area, I think people will buy. Here's the Nasdaq 100. You need that pullback. I'm just gonna stick with this level, which is 7641. That's the buy zone. And this is the German DAX having a little bit of a pullback. I think you should have a decent profit here if you're holding on to this one. Again, maybe closing out a bit. Not closing out more and more, but if you were fully positioned here, taking some profit here could probably be a good idea. I think that's pretty much it. Here's US interest rates moving down a little bit, but it's difficult to say too much about these right now. Okay, do you guys have any questions? Good morning, OBO. Thank you so much for joining us this morning, and thank you so much for signing up as well to Londinium FX. Do let me know if you have any question or anybody else. As you know, we covered a good amount of setups here, and what's been quite interesting lately, as you have seen, when the markets are trending, we have relatively good moves. Like even with gold, you know, we're up a bit, and then we had the opportunity to put the stop loss at break even. So we've been able to do that. And you know, once in a while we get it fully right, as we did with gas oil earlier this week, and we get that fully big profit that sort of causes the account to take a nice step to the upside. And I think it's a nice, it's like all trading is always frustrating, but it's a good thing because we sort of keep drawdowns under check. Because half of the time when it comes down to trading is to try to keep your powder dry and not let a bad or like just a few trades ruin your account. In fact, it's really, really normal that retail traders do that. Like for example, they have like a trading account that looks like this. So they have T for time, P or E for equity. So maybe they start here. I'll just call this 10,000. And then, they have a bit of trading, goes upwards like that. And it's very stable. And this is usually because what they do is that, say the price is at 100 and they buy here, the market goes to 90 and buy a bit more, and then it goes maybe down to 85 and then they buy a bit more. So if you bought 100 share here, then you buy 200 share here. So if you bought out 100 shares or 100 lots, then you buy 200 here. We just need to go back to 95 and you break even. So down here he would buy even more, this person, and then maybe buys 400 shares. Now he just needs to go up like that, and then he does like that, and then he has a little bit of tiny profit. So a lot of people do this. This is sort of the basic strategy people do. This is called martingale, which is a very, very dangerous strategy, but that's something that people do. Now that's going to give you a curve like this. I know this because I know people that trade like this, like personally know them, and I've seen their trading accounts because we were comparing. But from FXCM, I work with hundreds of clients, and they had like 250,000 people trading with them, active over the years. There's several million people. Anyway, so they see an account like that, and then one bad trade, for example, you started to buy the Eurodollar at 111.75, which was this year's low, and now it's going lower and lower and lower. So eventually what happens, it's not even like that actually, it's more you were trading nice and smoothly, and then you're down here and your equity is at zero just because people don't accept losses. On the other hand, the system we're using here, as you know, is brutal. We always have stop loss orders on absolutely everything. We have stop loss orders quite tight, which means that we'll have a nice profit and then a small profit, usually like 1.5%, 2%. But if you're trading with a big account, then it's still some decent amount of money. You can have a lot of fun with that. And in your head, at least in my head, I'm like, oh, okay, I could have done that with the money. Not that I think like that, but all the time, or that I regret things like that much. But it's still something that is there, or maybe on a subconscious level. Like, okay, oh, that was a few thousand pounds, or that was a few hundred pounds, depending on sort of how things are looking. Like, oh, I could have, used that to, buy a gadget or whatever. Not that I even need any gadgets, but you get the picture, right? So here we always work with very tight stop loss orders, and we sort of giving that up. And even now, like Eurodollar trading sideways for like 1 year, and stock markets and everything just getting a little bit weird. We're still doing relatively well on an equity basis. So on equity or return basis, the important thing is that, we were heading like that for the last 2 years, and the last few months we're just like that. And we're still up here and not down here. So, and now, as you've probably seen, more and more things are working out good. So hopefully we'll have that push again. And that's really important. A lot of people forget that. Okay, I think we're going to wrap things up. If you do have any questions during the day, just ping me on this number. You can reach me on this number as well, but I prefer if you reach out via this number here. Okay, guys, have a good day, and I'll see you guys on Monday. No London session close video today, but on Monday I'll be back, and let's see what happens with the dollar index. Hopefully by Monday, Tuesday, this has gone down a little bit and then gone up again, so we can reduce the trend defining level. And then I want to pile in by a bit more dollar index or maybe something else. We're still very far away from that target. Thank you.